Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. Now, let's change gears a little bit. Right back at the front page of TFNN.com. Why am I looking at this? Because, again, I want to tell you about this Tiger Dollar bonus sale. The reason why I want to tell you about this is that every Tuesday and Thursday, we are joined by Tim Ord of the Ord Oracle. If you want to check out his website, you can go to ord-oracle.com. Check out the newsletter, the book there. You can contact him. Additionally, you go down to services on TFNN.com, and we have two fantastic webinars from him, The Secret Signs of Market Tops and 6 Secret Ratios Every Trader Should Know. This one, so hyper pertinent right now because everyone is murmuring about, are we at a potential top? When do we pull back from this? What's going on? We just discussed that a little bit with Basil as well. So now is a fantastic time to do that. And you can get fantastic savings if you do so through purchasing them with Tiger Dollars from this double bonus sale. Again, ord-oracle.com every Tuesday and Thursday. Tim, it's fantastic to have you back. How are you doing?
Good. So everybody's kind of worried for a top here, I guess.
Yeah, absolutely.
I'm kind of getting the same vibes.
Yeah.
So let's take a look at it. Everybody was, not everybody, but everybody's kind of talking about the advanced decline and how bad the declining issues over the last 10 days, has really been dramatic to the downside. Well, actually, historically, that's been bullish. Actually, this happens every year in that December time frame. The advanced decline just kind of goes haywire. So it's next year at this time, something similar will happen. So it's what they're doing is they're selling off, the ones that are down, they're selling those off and taking a tax loss. So this is kind of a common occurrence. But we last time we were on, last Thursday, I presented the advanced decline on a 3-day average, and it reached bullish levels. The first chart we're talking about today, this is a 5-day average, so this is a week of information. And it's a little bit, a 3-day and a 5-day, it's just different degrees of, of looking kind of the same thing. The 3-day obviously acts quicker than the 5-day, but both of them are important. And right now, the bottom window is a NYSE advance over the NYSE decline with the 5-day average. And when this chart goes back to mid-2022, and when this chart gets below 0.7, usually your kind of exhaustion moves to the downside. And I noted in pink areas, I guess shaded pink areas at times when that indicator reached down below 0.7, then rallied to above 0.3. And normally if that happens in 30 days or less, in other words, a month, that's usually an indication of initiation of an uptrend. And we had quite a few over the last years, or 1, 2, 3, 4. We had 4 of them over the last year that did get down below 0.7. One back in, it looks like April of this year, which marked the bottom. Then we had one in October, one in November, and we got one in December. As we're hitting that right now, we're at 0.60 right now. And the last two didn't rally above 3.0. And that's why I'm looking for this one to do, because I think this is not a top of any consequence. You're actually still making a bottom here. The market really hasn't declined any. If you look at what's happened over the last 30 days, more or less, we've gone sideways.
Yes.
And actually, we'll go on and look at some other charts and show where the fear is. But it tells me, even last Thursday, I thought we were making a bottom because the 3-day average of the advanced decline did get below 0.7. Hasn't rallied yet. So now we got the 5-day down below 0.7 at 0.6. So we're still making a low in here. So we already see the majority of the decline happen, even though price-wise, really nothing has happened here. So let's flip to chart 2.
I have it up right now.
Yeah, this looks like the bigger picture. I kind of watched this chart. The bottom window is the SPX VIX ratio. The market is making higher highs. This ratio's made higher highs. That keeps the uptrend intact. If you look at the VIX right now, I think we're around 14 area. Anything below 16 is actually bullish. It used to be 17. I think 16 is actually a little bit better price. But the VIX really hasn't gone up. It's gone up a little bit, but it hasn't gone up in the 20s, which is really dangerous. So and this is a monthly chart. The month's not over yet, but we did hit a new high. Here recently. It was backed off just a little bit, but this is not a bearish sign at all. So S&Ps are making a higher high. The VIX is making, or the SPX VIX ratio is making higher high. That's pretty much definition of an uptrend. So I don't think we're making a top of any consequence here. Let's go to chart 3.
Yes.
This is the Zwag breast thrust indicator. And this indicator only triggers in bull markets. So if the market's going down, this won't trigger. But I showed, this chart goes back to 2021. I showed all the triggers over the last couple of years. And we had 3 of them in 2022, and that was all in the basing period. They're all happened pretty much in the same price level. And finally, you got going to the upside. Even the pullback we had in October 2023, you got a Zwag breast thrust initiation, I guess you might say. And even in August of this year, we got one, produced a rally. Actually, I probably should define what that is. But a Zwag breast thrust indicator is NYSE advancing it over NYSE total, and you take a 10-day moving average of that, and if you get down below 0.4, which we're at 0.38 now, and you rally into 0.60 or higher within 10 days or less, that signals a Zwag breast thrust bullish signal, suggesting we're still in a bull market, and the market's going to go higher. So let's go back to chart 1 real quick.
Yes.
Okay, chart 1 is what I'm hoping this will happen here too.
Okay.
Since we hit 0.6, we want to see over mid-January to hit this 3.0. That also happens in bull markets. So so yeah, we got the thrust down, we got the panic, and right now I need to see a sign of strength
there. Yeah.
to really suggest that we're going to have a bull market in 2025. And the music's going to come on now, I guess. It
is.
So.
Well, Tim, stay right there. I want you to finish your thought on this because it's very interesting stuff here. Folks, we'll be right back with Tim Ord right after this break. Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. I am joined right now by Tim Ord of the Ord Oracle. You can check him out over at ord-oracle.com. And again, we have some fantastic webinars from him. Tim, before we went to the break, we were looking at actually some bottoming patterns right now in the market, and you kind of need to see a sign of strength from here on out. Maybe sometime, I think you said middle of January, to tell if we're going to have a bull market for the year.
Right. Let's go back to chart 3.
Yes.
Okay, this is that Zwag breast indicator. This one triggers in the next 10 days, trading days.
Okay.
So it's basically 2 weeks away. So that's a little bit shorter term one. I got a 3-day average too that will trigger before these other ones. But right now we did get panic in the advanced decline. So we got really an oversold level. So now from this level, we need to see a sign of strength. And if we get it, then that bodes well for 2025. So 10 days from, it's 2 weeks from now. So it'll be, it's, I don't know, it won't be next week. It'll be a week, be first part of January. So anyhow, that's something to watch for. So we're getting, where the road meets the rubber meets the road right here. So everything's kind of, so anyhow, things need to happen here. And I think actually they're going to happen. So let's look at the short term. Go to chart 4.
Okay.
And this is the SPYs, the bottom windows of the VIX, and really kind of the magic number. I used to say anything below 17. A lot of times you're in a trending market on the VIX. 16 is works maybe just as well. But yeah, we're around 15 right now. We've been bouncing up a little bit, which is not a good sign. But we have a lot of support. If you go to the top window, which is the SPY, panic only happens at bottoms. And a panic, and I use the trend and ticks to determine the panic. And the trend readings of 1.2 or higher show, this is on a close, shows panic. And any ticks below minus 300 shows panic.
Okay.
And I know those ones in red going back over the last, well, it's kind of late November. And I put that area in pink where that panic happens in the ticks and trend. And it looks like right around 600 to 605, give or take. And we're in that panic area right now. So I expect this area to hold. Normally when you have panic, if you go back to that area, the panic will jump up again. So this area is going to be support. Will we pull back to 600? Maybe, maybe not. Doesn't really matter because this appears to be a base building here.
Okay.
And if you remember, on the advanced decline on the Zwag breast thrust indicator, which is a 10-day average, and the other one was a 5-day average, we already seen panic in the advanced decline. So the worst the market could do, it just went sideways with all that selling. To me, that's a bullish sign. Plus, we created a bullish ticks and trend readings. So the whole thing, to me, still looks bullish. Time will tell. We need this next rally to show some strength. When will the rally start? I'm thinking it's going to start pretty quick. Maybe this week. But it's not fair. We're not talking weeks away. We're talking days away.
I see.
So it's hard to pinpoint exactly what day it may start. But here's another little short benefit. If you look at yesterday's trading, if you notice the volume kind of jumped up.
Yep. And
you tested some previous highs. Every time you test a previous high and higher volume, at a minimum, you go up and test that high. And a lot of times you break it. So even though today's down, yesterday you broke above some previous highs and higher volume. And that doesn't happen in a downtrend. That happens up in an uptrend. I see. So eventually, at a minimum, we're going to test yesterday's high. Most likely, we're probably going to break it. So it's bullish.
Yeah, absolutely.
So, can we go sideways a few more days? Maybe, but I thought we might start rallying today. I was wrong. Maybe it starts tomorrow. But either way, we're going to start here pretty quick.
Definitely.
So we got a little time for the gold market.
Absolutely. Let's run through this.
Gold market. I think I showed this chart updated a little bit. We're basically at support. The top window is the daily GDX, and I kind of drew a line. Some previous highs were into them a little bit. The ones back to 2021, and there's another one in 2022. There's a high around 2023. So we're kind of running into those highs, a little bit below them, some are right above them. But what's important here is the bottom two indicators, which is the 18-day average up-down volume advanced decline indicators. Both those indicators hit below minus 40 back on mid-November. And the market's bounced up just a little bit, but it's more or less building a base. That's what I'm thinking, what's going on here. Because normally you get these readings that low, you see an exhaustion to the downside. So all the selling, in my opinion, according to both those charts, is done. So we haven't seen the sign of strength develop yet, but I think that's what's coming next. And I think both those markets are probably going to rally together. So if one starts, the other's probably going to start. There's no real. Well, we had one failure back in 2022, but let's see, that was 5 times. Well, anyhow, there's an 80% chance that we made a low on November 15th. The only reason why I say that, the previous 5 times, there was one failure out of 5 times, so that's 80% chance that we're making a low in this vicinity. So it's something not to bet against. Can indicators fail? Yeah, but I got some other indicators on GDX says the same thing, so the probability is probably higher than that. But if you get a chance to take an 80% back, I would take it.
Yeah,
so
absolutely.
I'm thinking we're making a low here. Looking at the bigger trend, it's kind of the same thing. This is charts updated. I always watch this. You can see on the GDX chart, this is the middle of the chart, you can see kind of where we are. And I noted that support area in pink. So we're kind of just back into that support area, and trends up. This is the monthly chart. The bottom one was a cumulative advanced decline, and when it's above the mid-Bollinger Band, you're in an uptrend. And same thing with the top window was the up-down volume. And if you're above the mid-Bollinger Band, you're in an uptrend. So you're buying a pullback on an uptrend. So with an 80% chance. So could there be failures around this time? Unlikely, but yeah, it could. So, but no, I don't see it here.
Absolutely. It'd be nice to see some more, breadth kind of pushed in to these guys. I think there's just so much that is kind of taking attention away from things like gold right now. I mean, everyone is piling into quantum. Everyone is piling into chip makers, into AI, right? And that's, kind of taking capital away from stuff like this. And so I wonder, you get some kind of, tempering of the excitement in those kind of areas, and you start seeing some stuff like gold come out. But I mean, these are fantastic charts for it. I mean, it's certainly the SPX, right? Because I mean, you're getting even Financial Times articles written like, this is the American bubble, like we are at the actual top, and a lot of what we're looking at saying we just need a sign of strength and we can take going. So
yeah, I agree with you. So
Tim, thank you so much for
fear.
Yeah.
Right.
Tim, we'll see you Thursday, okay? Thank you so much for coming on.
All right, thank you.
Take care.